Good afternoon, everyone. Welcome to the Friday recap. I am Evan Lazarus. I'm the CEO of T3 Live. And what a week it's been. It's been an amazing week here at T3 Live. Kicked off with the rollout and introduction of Matt Wiz Buckley and the T3 Live Top Gun options integration, which we are hard at work on. And I want to make sure everyone knows, because there's been just an immense amount of response, all very positive to T3 Live's taking its step into the options arena after years, building our own footprint in the equity market space, and Scott and Mark and myself and the rest of the T3 Live team, have spent years cultivating and building our craft, and really trying to develop our expertise and help build valuable content for you to use day in and day out. We are now moving, one step forward, which was a natural progression for us into the option spaces. It's just there's just so much harmony between both what we do and the options world. So we're very happy to have Wiz and his team of options experts that will be unveiled in the coming weeks. And all the content that he has to offer and his knowledge and insight is nothing short of world class, and we're very happy to have him. Me particularly, it's been a great couple of weeks, and I'm happy this week is over. But on the other hand, I'm also very happy that we're able to move forward and give you the thing that you've been asking for a very long time. So with that, we now have, some daily options content. Here's the T3 Live site, and, we're going to try and feature more of Matt's content day in and day out, as well as Scott's, regular recap and morning call and Scott's content. And hopefully we'll get a little more synergy between the two, where, we'll get some ways to trade, some various ideas, both on the equity side as well as the option side. So lots of things in the cards, and lots of things that are going to come out in the next couple of weeks and months. And so keep your eyes and ears open, because I know that there's our goal here was to create not only the valuable content to help steer you down the right path, and to help you understand how to manage risk appropriately, but also to do it in a way that was different than what is typical, and keeping true to our core live aspects. So everything we're going to do is going to be centered around doing it real time, and applying real time knowledge and practical application. So that being said, let's talk some stock and some market. We're going to pop over here to my charts, and we're going to focus primarily on the indexes. And over the last few weeks, when I've had the opportunity to host a morning call or a recap, I've spent some time, giving out some information and knowledge as to technical analysis and, the things that I tend to look at and what defines a trend. And I'm going to stay with that theme. Here's the SPY. We're going to start with the ETF here for the S&P. And, you can see again our rising averages. It still remains, the ship remains steady. Rising 8, rising 21, what I call the railroad tracks, firmly rooted, one on top of the other, just riding higher. And until, these averages, again, which is just a function of an average price over time, start to really change, or you start to see this 8 turn down, that'll be our clue that something, potentially is changing here. But right now, that just isn't the case. And the averages are always going to follow price, so price will lead. Price has to turn down for the averages to turn down. From a technical standpoint, every pullback into this 21 EMA over the last, almost 2 years at this point has been a buying opportunity, and that remains true even in this last dip that we took a few weeks back. This is a weekly chart. Every candlestick you see is 1 week of time. So we are sitting again at new highs here in the market. And while we didn't see, a tremendous amount of thrust to the upside here, and you can see volume kind of coming off a little bit as we make new highs, but that's kind of been, case in point almost every time. We still have, a healthy price action, and the the longer that the market sits and consolidates, maybe another week or two in this area, we'll have another what I call tradable base from which, there could be another leg higher. So we're going to keep an eye on these new highs. I will say, as I always, like to teach a little bit, I've noticed in the last week or two with various individual stock plays, I've seen this pattern, and it's happened a couple of times in some of the off the charts trades where we make new highs and we sit there for a couple of days and then that we've seen some failure, meaning the price action, it doesn't consolidate and go higher. It ultimately consolidates and trades back in, which is what I call failed breakout, where it can't hold, the breakout can't hold. And ultimately what happens here, the psychology of that is that, buyers typically, get long up here into new highs. So you have a lot of money that pours in. And when that breakout doesn't continue to the upside and it turns back down, what happens is that you have, trapped, essentially the psychology of it is, the buyers are trapped and you have that snowball effect of selling. So a good example that I saw of that was in Deckers. Here's the chart of Deckers. Again, just as an example, not necessarily saying Deckers is the market, but in Deckers Outdoors, we saw this breakout here back a few days, and then you get that swift turn down when that breakout doesn't hold. And again, this is just one example of many that I've seen over the late. So we'll keep an eye on that. Here's the SPY again, just a different time frame. This is the daily chart, and you can see the last 6, 7, 8 trading days, a lot of gyrations back and forth, back and forth, back and forth, but still holding that breakout. And this, to me, this morning we started the day off with what is perceived as bad news in the employment numbers, or less than expected, and again, what I think ultimately defines somebody that's successful in this business, regardless of stock or options, whatever asset class you trade, is objectivity. And while we may have perceived bad news, or what is perceived bad news, trading isn't always about bad news goes down and good news goes up. Sometimes it's actually quite contrary. So we try to stay rooted in the movement of price. That's really the purpose of technical analysis, is that you weed out the noise and the information and you focus on price, because ultimately, as traders, price goes up, we make money, price goes down, we either try to make money when price goes down, or we protect risk. We try to, do our best to lose as little as possible. So, that's really firmly what the basis of what I know about trading, and the way I approach it. So I try not to get rooted in the headlines and the opinions, rather than, what is price telling me, because price ultimately is my primary indicator. So, we have this bad news, and this bad news ends up winding, we close on our highs today. So you can see, I'll go down to, here's a 15-minute look. And you can see yesterday, the market, basically rolls over, and we get this, pretty sharp sell-off intraday. And then we start the day with the bad news. The market tries to push lower, and then we turn back up, closing the day basically on the highs. So, what does this mean? Well, it just means that the market still continues to have a bid in it, and the market still continues to be strong, as per our technicals, as per what our charts tell us. So until something changes, here. We have to stay rooted in the fact that this market, based on what we're seeing, tells us it's not done probing to the upside, and there's still potentially more room to go higher. As we sit in all-time highs, I'm going to go back to my weekly look, and let's see, let's go out even further. Let's look at, here's a monthly chart. So you can see, going back to the early 90s. This is the SPYs. You can see you have this breakout of price that occurred back here in, I guess, what was this? 2013, April, March, April 2013. And we haven't stopped since. You can see firmly holding here the 8-period EMA. This is a monthly chart, firmly holding that 8-period EMA. And there's just no sign of stopping here. So, rather than try to predict, something, or say this market's overbought, or, whatever you might think, the reality of it is, you don't need to be the first person in a trade. It's not smart money. Smart money is not trying to predict the top. Smart money is not trying to predict the bottom. Smart money is waiting for the right opportunity to get involved with calculated risk, and just saying, well, I think this is the top or I think this is the bottom is not necessarily calculated risk. So let's follow our footprint of money as the days and weeks go on. Each week presents new opportunity, new trade ideas, new information. We have a defined what we would call a defined breakout here. Again, you still have this is the weekly. Still have those very strong trending moving averages. The market still has what I call tailwind, and unless something changes here, early next week, or we start to see some selling step in, and this breakout ultimately fails, and we start to we close under this what is our support line, or that things could start to change. But let's not make assumptions. Let's just focus on what it is we do see, and structure our opinions and our analysis accordingly. So that's really the takeaway for this week. I think it's been again it's been the last couple of weeks have been very, very stock specific, and we can get into the whole stock. I think Scott does a phenomenal job each morning with his morning note as part of the Rather All Access product, covering where individual opportunities lie. And as well as the guys on the VTF. And I think in time you're going to get very comfortable, with Wiz's commentary and the way he perceives things. His vantage point is not necessarily technical, more so geopolitical. Again, which is a little different than the way I look at things, but that's what makes a market. And I think that the marriage of the two is really the sweet spot. And in time, as we unveil new services, I think that we're going to find a happy medium from what it is we do in terms of myself and some of my colleagues here at T3 Live, and the way we approach and the way Matt and his colleagues tend to approach the options market, because there is a real sweet spot there that we're going to try and focus on, because that's really what you've asked for in the last several months, if not even the last year or two. So it's been an amazing week. I can't stress how excited I am for you, the users and subscribers of our community. I'm exhausted. It's been a fun week for me and the last couple of weeks, but I need to decompress this weekend. But I will hopefully we'll have some more communication next week, and we'll start to get some good options content rolled out to you, and build on the excitement that we have here. So as always, have a phenomenal weekend. I hope you enjoy, and stay tuned for things to come.